The US dollar is struggling at the start of another busy week for global financial markets. Hardly a surprise following on from last week's FOMC meeting, where we heard from Federal Reserve Chair Jerome Powell in what was considered a slight pushback against market expectations, even though the Fed chair did confirm with the new dot plot that the Fed are expecting 2 more rate cuts of 25 basis points through to the end of 2025. However, I think the surprise came in when markets looked at the projections for 2026 and 2027, which according to the Fed dot plot only showed 1 rate cut of 25 basis points each for the next 2 years. Quite surprising there for market participants, and that in part could explain some of the US dollar weakness we are seeing at the start of the week. Now, obviously, there is still quite a lot of data this week, and the US dollar is likely to remain volatile towards that data. We obviously have PCE data, which is the Fed's preferred gauge of inflation, while we also have PMI data, which will give us more insights into the strength and the health of the US economy. Now, beyond that, obviously, we will have initial jobless claims numbers as well. And with the labor market being so important to the Federal Reserve, that could also stoke some volatility later this week. We also have a host of Federal Reserve policymakers who will be giving comments throughout the week. And that is another thing that could obviously come into play when it comes to the direction of the dollar for the rest of the week. So please bear that in mind, traders, and trade safe. And I will catch you guys soon with another market update. Have a good one.